Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
Think about a bicycle. It takes balance to get where you want to go. Now think about business. Whatever your business or organization, you ride the line between numbers and people. Just like the bike, it takes balance. CLA, CPAs, consultants, and wealth advisors. That's CLA. We'll get you there. Clifton Larson Allen LLP investment advisory services are offered through Clifton Larson Allen Wealth Advisors LLC, an SEC registered investment advisor.
When you look into Discover Student Loans, what you see might surprise you. We can help cover your college costs, don't charge you fees, and give you cash rewards for good grades. Ready to apply? Visit discoverstudentloans.com. Limitations apply.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face.
Well, hello and welcome, everyone. Welcome to the China Shop. You made it. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of financialineptitude.com. How you doing today, Kyle?
Are you talking in slow motion?
How are you doing, Kyle?
It's not that obvious. It's just enough to where it kind of sounds like it's like when you listen to something at 1 1/4 speed for too long, and then you go listen to the real thing. Oh, it sounds off.
Well, I am still medicated post surgery, so maybe that's slowing me down.
Yeah, I was wondering if maybe that was. We were joking about that when we recorded today's interview.
Oh yeah,
I was like, well, maybe that really is happening.
Yeah. Well, I don't notice, but that's because my whole brain speed has been underclocked for the duration.
What's going on? What's the word today?
Just coming back at you hot with another exciting news episode brought to you by Sue Pullen at Fairway Independent Mortgage for all your mortgage needs.
An equal housing lender.
Hell yeah, she is. She doesn't give a fuck. She'll loan to anybody that qualifies.
Yeah, if they qualify.
If they qualify. Anyhow, all right, let's She does not loan to pets, animals of any sort, or even aliens from other worlds, I've been told.
You're definitely medicated. What's the first story?
Right, hold on. Gotta hear a song first.
We're just two fools trading information.
What?
Two fools trading information.
I'm inclined to agree.
Two fools trading information.
That is accurate. Very accurate. What information? True.
You want me to lead off? I thought you had the big story.
What is the big story?
FOMC was today, baby.
Oh, shit. I'm supposed to talk about that? Fuck, I should have really read those notes.
I guess I've got it. I think I might be the one with the story this time that mentions FOMC.
All the FOMC was today was just the release of the meeting notes from the July meeting.
Okay.
So the only thing you're getting to do is really see the info that they were discussing at that time, like more than just like the statement that they prepare or the press conference they offer. I did read through it a little bit. I don't really know exactly what I'm looking at, but I didn't see anything in that report that looked extremely bullish.
The idea that I came across was that they might be less aggressive than they were planning and do 50 bips instead of 75. Yeah,
that's exactly right. The percentage chances of the 50 bip rate hike is now, I think, at 57%. I can't remember what it was before, but I want to say it was around like 40. I think we talked about after the first CPI numbers came out.
Sounds about right.
But like most of the stuff I was reading about in there talked about shrinking GDP, reduced consumer spending, inflation that's still elevated. Nothing that sounds like, oh, this is definitely a rosy picture ahead.
And yet the market moved up after the news.
All they care about is how many bips is it going to be.
Okay. Well, I mean, it moved up, but then moved back down. So it couldn't have been too great, right?
Right. And that might actually be kind of more bearish if erase the entire move.
The entire move was erased. Yes. Yes.
Yeah.
In fact, I was out away from the computer at a doctor's appointment, and I came back and looked at the chart and was like, "Man, I missed a great short today." Anyhow, I was reading a story about it. Also mentioned that we've had some bad earnings, and especially from Target. Apparently,
Yeah, Target was not great.
a little bit of a miss.
Yeah, they lost about 90% drop, is what the headline here says. 90% plunge in second quarter, falling far short of expectations.
Oh, yeah, you guys, they missed the target on that one.
The thing is, though, it's not, I don't think it's quite as bad as it sounds. They have been trying to, I think we talked about this before. They put everything on sale, like trying to liquidate or reduce their inventory. They built up too much.
Yeah.
So a lot of that, I think, was ate on this earnings report.
Okay. Still 90% though. 90% miss is astounding.
Yeah, it's not good. But the CEO was saying that they're seeing an encouraging start to the back to school shopping season. So maybe they're doing something similar like Walmart, where Walmart's like, hey, earnings are going to suck. We'll tell you this a month now, so that way you're not surprised when we get to there, and maybe things look good. Or maybe they're just trying to eat all the losses in the second quarter, so that way the third quarter and fourth quarter look amazing.
Oh, yeah. That's so they have just one bad earnings quarter. Like we know it's going to suck. Let's just pile it all into this one quarter, then we can move past it.
The same period last year, they were net income was 1.8 billion. This quarter was 183 million. I don't think you dropped that much without doing something.
Oh, damn. Okay, yeah, they had to. They wrote off all that inventory, right?
That's kind of what it sounds like. Sounds like they tried to eat as many of their upcoming costs as they could. I'd have to look at the balance sheet not that I'd understand it anyway, but that's my suspicion.
Yeah, I guess when you put something on clearance, do you get to write off the difference?
I don't know how that works. I mean, if you're selling it at a loss or you're not making money on it.
I'm trying to remember my days of working at retail. I know if something was like damaged and we wrote it off, we had a sheet for writing it off and it got written off.
Right.
But I don't think I didn't, I was running a department at the World Market, but I don't remember any had extra paperwork for clearance.
You don't have depreciation line items?
No. Good question. If anybody in retail knows, give us a shout out.
Yeah.
But yeah, so it was a declining day on the markets after that FOMC. It tried to buy up, but it didn't work. What stories you got for us, Kyle?
Why don't you talk about the Bed Bath & Beyond one that you posted here? I want to hear more about this.
All right. As you well know, Bed Bath & Beyond, one of the meme stocks, has been going crazy lately.
It's been a lot of fun.
And that craziness has slowed down quite a little bit, I've been told, over some shocking news that Ryan Cohen filed a 144 form with the Securities and Exchange Commission to sell up to all of his stake.
Mm-hmm.
And looking at their stock price, it dropped, got as high as $30, and it ended the day at 23. So that's what 23% drop from its high on this news.
What was the level I told you to blind short it?
30. Yeah. No, I was on board. I just wasn't watching it today.
Somebody was getting a massage.
I messed up my shoulder, man.
There is okay. So the headlines are all making this look like he sold his stake, but on Twitter, their boards are lighting up with everyone kind of pointing out the fact that this form doesn't mean that he actually sold yet. It's just the intent to sell.
I see. I think that's just everybody trying to keep calm in the face of the obvious.
Yeah.
If the dude sells now, he's going to make $60 million on what? A $60 million bet?
Yeah. I will say though, on their defense, they claim that his ownership percentage changed because of some stock buyback thing. This sounds like a whole fucking conspiracy theory now that I'm saying this out loud.
Yes, it does.
He had to refile this because of the buybacks that reduced or changed his ownership stake. And he had previously already filed this form 144 with the intent to sell. So this isn't anything new. That's what they claim.
And it certainly sounds like a don't panic and sell your shares right after a giant rip.
Yeah, that sounds a lot like that.
I don't have any, but I did intend to blind short at 30. I missed my entry. I still think it's a great place to short it, personally. You all do what you're going to do because that's on you, but I would not be holding it if I had it.
Mm-hmm.
You have shares. What are you planning on doing?
Oh, I've got covered calls sold on them. My shares are paid for.
Oh, there you go.
Remember the last few times it hit 30?
Ka-ching, ka-ching, ka-ching.
Yeah. Yep. Every time.
Doing it right. Now, Ryan Cohen hasn't just bought and held. He has installed 3 of his people on the board, and they did get a new CEO in there. Do you know if they managed to sell Bye Bye Baby?
I don't know. There was a lot of stuff in their latest earnings report talking about some of the changes that they're trying to implement, but I don't remember seeing that being part of it yet. Yeah, that was part of his open letter. Yeah.
Yeah, I guess as of June 2022, they're still trying to sell it.
Yeah.
Yeah, so I mean, the timing of it to me also, I mean, not only would he make some money because of this latest push,
Right.
but it looks like the changes he wanted to make haven't been going through, even with his people. So I think he's about to sell, and I would consider it wise if I had shares to get out before him, especially on a big rip. Take some profit.
Not advice.
I'm just talking about what I would do with my share.
That I will be. I am comfortable saying get paid.
Yeah, get paid.
Pay yourself. If not now, when? Yeah.
No, when? Yeah, I mean, what? Like at the beginning of the week, it was at $12, $13. Come on,
Right.
It's at $23. Anyhow, all right. What else you got, Kyle?
What else do I got? Remember what you're talking about a couple days ago with the sounded like we were being held hostage as retail traders. Like the bottom's not in unless you guys sell.
Oh yeah. I remember that.
Yeah. So there's a new Fidelity study that saw that caught my eye. I just wanted to bring it up because it tied back in nicely with that. It says retirement accounts are taking a hit from inflation, but the study shows that people aren't selling. Most investors are still committed for the long haul despite the unease over this volatility. If everybody in the retail just gets together and just buys, it sounds like we got them, Dan. I think we found the hack. We just have to convince 300 million people to not sell.
Well, I mean, how many listeners does this podcast have? About 100 million. So everybody tell 2 people.
That's rounding up.
Rounding up to the nearest 100 million.
Yes.
Okay. More realistically, everybody tell 200,000 people.
Yeah, there you go. That'll get us there. There was a second part to this story that caught my eye too. Mostly it was just because it tied in nicely with what you were saying last week. But at the very end, it says it's even for people nearing retirement, it's important that your savings may have to last 15, 20, 25 years after you retire. So you want to continue to take a long-term approach and not make changes based on short-term market swings.
Yeah.
That sounds like somebody trying to calm somebody and not bottom the market out. Who wrote this? Fidelity. That sounds like something a manager would say who runs a retirement account and doesn't want everyone to liquidate their holdings.
I mean, Fidelity does run a ton of retirement accounts.
I know.
They're one of the big players.
So ever since we started the show, I can't look at any statement from anybody without looking at what do they want? What do they want out of this?
What's in it for you?
Yeah.
What's your motive? It's not to help me.
Yeah.
That would be crazy.
The Shamrell told Fox Business News, we try to encourage people to take a long-term approach to retirement savings. So it's great to see the majority of retirement savers stayed the course and did not make changes based on market uncertainty in Q2, because then we still get our cut. You didn't say that part. I added that.
Kyle's words.
Yeah. I think the real thing is do what you want to do.
Yeah, do what's best for you in your time frame.
Yes. Don't listen to idiots like us or Fidelity.
I know we've got a big Jim Cramer story, but real quick before we get there.
Yeah.
Another callback. Remember when we were talking about the latest crypto hack?
Is that the one that offered the bounty?
Yeah, where they were like, if you give it back, we'll let you keep 10%.
Yeah. That'll obviously stop Prime.
Yeah, well, I was reading in the New York Post today that cryptocurrency hacking has jumped 60% this year. $1.9 billion in funds have been stolen from decentralized finance protocols.
Good Lord. I thought that was the whole point of that.
It was the whole point, but because it's open source, hackers can look at all the code and figure out how to exploit it.
That's true.
This same period last year was 1.2 billion, so it is up over 50% hacking.
Does it say how much they made in bounties?
No, does not. We've seen a huge drop off of crypto scams. Like all the scammers are turning to hacking.
Ah, Now that everyone's bought it, now they have to steal it.
Now they have to steal it. Well, I think it's more akin to now that the price has fallen and everybody's lost so much money, no one can afford to buy a shitcoin.
Oh.
It's easy to buy a shitcoin when you're making money and you're just like, oh, yeah, I'll take a little bit of a profit from my Ethereum and buy the shitcoin, buy another lotto ticket.
See what happens.
See what happens. So, scamming abounds. But now, like, almost nobody's got money to buy, in my opinion. So scamming's down 65% from last year. Scammers by this point had made 1.6 billion. The revenue's down to 1.6 billion. This time last year, it was at $4.5 billion scammed.
How do they track all that?
I don't know. You have to ask the New York Times.
I don't know. Are the hackers filing their W-2s?
Yeah. How much money did you make from hacking this year?
Al Capone proved that you're supposed to claim even illicit activities on your taxes.
Or at least, figure out a way to claim them. Otherwise, you're going to prison.
Right. All right. Last one. I've been looking forward to this. You posted this in the Discord this afternoon.
The Cramer Corner.
Yes. So why don't you introduce us to the story, and then I'll do my contribution.
Everybody's favorite Mad Money host, Jim Cramer, has offered a list of off-price retailer stocks that we investors should be looking at. To quote him, there's an inventory glut in the traditional retailers, and the big chains are desperate to get rid of this stuff so they can bring in new product. So he's saying, take a look. These off-price chains are the buyers of last resort. He suggests taking a look and considering to pick up some long-term holdings.
He does say at the very end that investors should understand these are long-term opportunities. It doesn't mean that they're doing that great right now. That's how he ends it.
Mm-hmm.
All right, what's the first stock on this list?
First stock is TJX.
DJX. Okay, let's pull it up on the chart here. I see that it closed at 68.54, and it's got a really strong resistance at 71. Huh, interesting. We should be buying this now?
You should be eyeing to buy.
What's the next one?
Burlington Stores.
Burlington Stores closed at 170. Let's see. Extremely strong resistance at 178.48. Interesting. And we should be buying this right before this resistance?
Yeah. Pick it up long term, buy it and hold it. Ross Stores. Not quite a double top, but just filled a gap into resistance.
And also coming right into its 200-day moving average. Seems like a great spot to buy. Last one. Sorry.
Ollie's Bargain Outlet Holdings.
This one's got a little more room, at least. It's trading at 64. It's right in between two resistances and supports, one at 55 and one at 75. This one's maybe better, but kind of feels like he's trying to get the last push to get to these resistance points. So that way institutions can unload all their shit.
I know I posted the story in our Discord and said, if anybody wants to look at some short ideas, here's Kramer's got a list for us.
Long term, these probably aren't bad stocks. Just every time he recommends something, it's always at the worst time, it seems like.
Right, because I don't watch Mad Money. I honestly couldn't tell you who does, but I'm certain not everybody watching Mad Money is going to be really up on technical analysis. And I'm sure there are plenty of people that are like, oh, well, he said it, so I'll just put in the buy order. And that's an awful thing to do.
Right.
Awful thing to do. You got to do your own analysis. Put in the buy order if you truly believe in the fundamentals, but at least do yourself a favor and cost average in.
Yep.
Like if you really want these long term, like that's any long term holding, from what I understand and what we've been told by the professionals, like dollar cost average in.
Yeah, and sit on it for 20 years.
Sit on it, yeah. Not advice.
It was an interesting theme, though. Huh? Everything's coming right up onto an important support.
Yeah. Oh, Cramer, you're the worst.
We got anything else, or did we cover it all?
Anyhow, now we're going extra long. But we're allowed to, because we do whatever the fuck we want.
All right. Well,
all right. Well, thanks for sticking around to the end, folks. That's going to be the news today.
Do whatever you want.
Do whatever you want. We'll be back at you real soon with
whatever we want.
With a weekend episode. It's a salty episode. And until then, happy trades.
Goodbye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
When you look into Discover Student Loans, what you see might surprise you. We can help cover your college costs, don't charge you fees, and give you cash rewards for good grades. Ready to apply? Visit discoverstudentloans.com. Limitations apply.
At Target, you can find the things you need that also align with your sustainable goals and help you care for the planet. Target makes it easy to shop with the future in mind, with brands like Everspring, made with natural ingredients and recycled packaging, Target Clean Beauty products, formulated without chemicals and other harmful ingredients, and initiatives like Target Zero that offer zero-waste beauty solutions. All of these products are available at everyday low prices, meaning you never have to compromise what's important to you when you shop. Sustainable college essentials, from recycled packaging and zero-waste beauty, available at Target. Visit Target.com or head to your local Target store.